Right now, gold is trading back above at $2,185 per ounce for an all-time record high. Gold prices are up 21% so far in 2024. We've just seen Goldman Sachs, JP Morgan, Citigroup. Over the course of this week, they have increased their forecast for gold prices over the course of this year. Citigroup coming in the most bullish with $3,000 per ounce expected over 2024, whereas the other main Wall Street banks, they are predicting gold prices to be at $2,300 per ounce. Now this of course comes off the back of us at the Gold and Silver Club, and of course many of you too banking a windfall amount of profit over the course of this week. We've now banked over 10,000 points profit with our clients at the Gold and Silver Club across gold, silver, platinum, palladium, and also crude oil. So of course you know that calculation. Every 1 lot contract you'd be trading, that's over $100,000 of profit. Every 10 lot contract you'd be trading, that's over $1 million of profit. Now this week we've also seen Palladium finally have that God candle, that impulse move to the upside, breaking out 12% in a single day. Yes, rocketing from $930 per ounce all the way up to $1,060 per ounce, all in a single day. Massive short squeeze for all of the hedge funds and money managers who've been predominantly shorting Palladium over the course of 2024. It was only a matter of time before this happened. We've been banging the drum. Palladium, huge opportunity down towards $900 per ounce. The price broke all the way down to $850. Over the course of February, the turning point was, of course, Valentine's Day. This is where we identified with you multiple opportunities to be buying gold, sub $2,000 per ounce. This is where we built into 5 positions. Silver, when it broke down towards $22.50 and $22 per ounce. We took the opportunity from non-farm payroll on Friday as exit liquidity when silver prices broke out to $24.50 per ounce. Platinum as well has broken out to $930 per ounce. You know the mantra on platinum, massive opportunities below $900 per ounce. Now we've started to see massive breakouts to the upside. And of course, you also saw crude oil this week break back to $80 per barrel. As you know, we maintain 7 positions on this market and we've continued to scale out our profits. Now, as we go into next week, Tuesday, we have CPI data. Then as we go into Friday next week, it's going to be quad witching. Now this period into the next week in the lead up to quad witching has been notorious in previous years for pressure, particularly on crude oil. This time last year was when oil prices, they broke down over 1,000 points or $10 in a week in the lead up to quad witching. Have that on the radar. We have taken the opportunity to scale out and bank on strength over the course of this week using multiple news items, including the European Central Bank and Friday's non-farm payroll, to bank further profits. However, we do want to make sure we definitely capitalize here if we're going to see further acceleration to the upside on metals between now and the end of the month, then as we go into the next quarter, as we transition into April, because as it stands right now, gold is going to have the highest close on record here, above $2,150 per ounce. Gold price in US dollar has never been this high on a weekly closing basis. What tends to happen here is where the hedge funds and money managers who missed out on the move that we've caught with you, the move all the way from sub $2,000 per ounce all the way up to $2,185 per ounce, a 2,000 point move now since Valentine's Day in 3 weeks. That is what gold has done. Now they're going to start getting calls from their clients who want exposure to gold. Why are they not in gold with it breaking out to all-time record highs? You're going to see a lot of FOMO here and potential for a trap as we go into next week if we do see profit taking into quad witching. Now it's a win-win for us. If we break out further, we'll scale out more profits. If we do rotate lower, particularly on oil, I'm looking to sniper in again, back down towards the swing lows, which I'll talk you through in more detail as we go into next week. But there's definitely the setup I can see there right now. Hedge funds and money managers, they're starting to pile in to oil with a break towards $80 per barrel. We've seen over 81% this week. They've gone long. They've not been buying at 70, 71 and 72. They've been buying at 80, and now we have the price starting to pull back into next week's quad witching. And also we've now seen many hedge funds, they're starting to buy later into the move on gold. Palladium, we know they've been popped out, massive short squeeze over the course of this week. And of course, silver has been a massive profit opportunity as well to bank further profits and just continue to bricklay those profits, compound them, and then essentially hit the ground running here as we get into the middle of March here and as we transition into the next quarter as well. So it has been back-to-back opportunities here just to really smash it, crush it. So I hope that you have also banked a windfall amount of profit over the course of this week. Again, we've banked over 10,000 points profit with our clients at the Gold and Silver Club. It's a lot more than that, but just to make it very straightforward and simple for you, for the calculations, 10,000 points, one lot, that's $100,000, 10 lot contract, that's going to net you $1 million in profit. Again, all of this we've continued to talk you through on all of the commodity reports. So definitely ditch those outdated technical analysis strategies because they're not going to give you any edge. Just remember, technical analysis is the first thing every single new trader is taught. It's like going to preschool. It's like learning your ABC, but you have to graduate beyond that. This is where you need to be utilizing data, statistics, market intelligence. You want to further align this and understand the capital flows in the market. This is very important. This is how the price is derived for each commodity. The amount of buying pressure versus selling pressure equals price. You need to know what capital flows are doing. Further align that as well with how the hedge funds, the money managers, the banks, the institutions, how they're positioned in the market in real time. That is going to help you massively. And of course, understanding the intermarket correlations, the ratios in the market, the daily, weekly, monthly, quarterly, real-time, data-driven cycle, and then of course the fundamentals, the macroeconomics and the geopolitics, and finally the intermarket correlations and ratios in the market. This is all going to help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the professional research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to join our professional mentorship program.